funds, how do you first handle that growth?
At least split the revenue, get to that goal.
How long from a year, like that MVP stage, to your first paying customer?
If there is one thing if I could have done differently, we spent almost like solid 2 years.
Why go into the grind again? Why go into entrepreneurship?
Long story short, they really loved the concept of what we had built as an application for the university.
At some point, you'd run out of savings and you maybe had to consider.
We said we are not going to let go anybody. We already had a backlog of almost like half of the revenue was just in bookings.
Based on that, how did you figure out the right price?
I think that was the biggest mistake we did.
Hey guys, welcome back to Funds and Founders. Today we have on Ganesh. We first met at, I want to say, the Funda event.
Yeah, that's right.
And then we stayed in touch, and then you're part of the Austin Indian community.
Yeah.
We chatted quite a bit about different ideas.
Yeah.
One thing I'd like to say is, my understanding is you've been in tech for a while, you had a successful exit with a startup, and then you went into stealth mode again to try to build a new AI SaaS company.
Yeah.
Why go into the grind again? Why go into entrepreneurship again?
Good question. Actually, I didn't have any plans. I didn't have any plans to even start any venture. It was just that I saw some needs. I saw there is an ability for the people that I know can do better, not me. And if we can work together, maybe we can solve a problem. That's how it started. So the second time, it's purely based on the aspect of the shift that we saw with the Gen AI stuff. We were fortunate enough to work from GPT-1 onwards, so we had seen the transition happening. But as soon as 3 and 3.5 came into play, that was like a huge transition from what I had seen earlier. So that was like the aha moment for us, saying that, hey, if this can solve the problem of unstructured data to give insights which seems easy to believe in, maybe it's hallucinating, that's okay. But how do you use this technology to change the way people communicate with each other, right? So that kind of drove us to start thinking, hey, do we then look for ideas? Where do we look for ideas? And we didn't want to just jump into it. So we were just dabbling with multiple ideas, and we kind of have honed into a place where it's an extremely crowded space. But we have seen, talking to a lot of stakeholders, it's a solution. They don't see a solution to the problem that has been around for more than at least a decade, if not more. And what we are trying to do here is, if we can take a holistic approach with this new technology built from the ground up, can we solve that problem? So,
Got it. So going back to your journey, I think if I have my facts correct, you were at Cisco for quite a while.
yeah,
And then you started your own company.
yeah.
And let's talk about that journey of how do you go from seasoned tech employee to I have an idea, and just briefly tell us what that company was. What were you doing there?
Actually, that's a good question. So primarily at Cisco, I did multiple roles from hardware. Then I moved into the software group. Was fortunate enough to participate in a big transformation effort where we had to completely change the way we do the business, and we were moving from waterfall to agile. And in that process, we had seen huge problems with respect to just people aligning to a common vision. So there were different business units that pretty much came into a single business unit. Everyone had a different working style. Different people from San Jose, North Carolina. We had people from China, from India, from Europe. Everyone had a different way of dealing with each other. But when you put them together and say that, hey, this is the place we want to go, everyone ends up doing what they want. So we ended up having a lot of issues with the attrition, transformation, people leaving very quickly in the process, a lot of frustration. And that kind of prompted us to do a lot of employee engagement activities. So we did hackathons, we did activities which are related to basically looking at different cultures that we had. Can we celebrate some festival, right? It worked maybe in small pockets, didn't work holistically. We still had issues. We tried every assessment that's out there. And as we were in a group that was trying to figure out how do you solve the pain point of reducing the network failures using data, and we were able to do that very successfully. And we ended up being the first homegrown software division that hit $1 billion.
Nice.
And in that meteoric rise, as we were trying to focus on product and P&L, we faced a lot of issue with people and just attrition. And constantly on the churn, we were thinking if there is a way for us to use the same technique of looking at the device and finding the pattern, can we do the same with people? I think that was a very naive way of thinking, because people are very hard to understand. There is no pattern per se, and that's how I got my hairstyle too.
Nice.
Yeah, trying to understand people. But that kind of motivated us to see how do we go beyond just the traditional way of looking at people. How do you go deeper into understanding what motivates you, and how do I align those motivations to the right opportunities? And that prompted us to, at least for me, that was enough motivation for me to talk to a bunch of folks had the same issue. I met my co-founder through my Cisco days, where he was a professor in one of the top schools. We were hiring students from him. And I felt if we can look at unstructured data of humans and create some patterns, can we then align those patterns to your motivations? And that's the journey where we began. We didn't know it was going to be a company. We said, okay, we're going to give it a try for 6 months. If it doesn't work, I'll come back.
Well, at this point, are you still doing a full-time job, or?
No, actually, by the time we had, so the ideation of this pain point and validating the pain point, I was still working. But as soon as I could see there is enough pain point that everyone is saying, hey, this is a constant pain point. We hire a lot of people who say all the right things, but when it comes to delivery, their motivations don't align to the business opportunity motivation. So there is a disconnect. Either they leave or it creates a lot more HR issues. So as we knew there is a validated idea, we wanted to do something. I stepped down, started working on it full time. Met with my co-founder during my Cisco days. I asked him, hey, do you want to join as a consultant? He also quit working or supporting Cisco that time. We started working, and what is interesting is he used to live in a place where he was not in US, and what I thought is that it's better to have somebody who's going to work at this stage to be close to where we are. So I just invited him. He stayed at our place for close to 6 months, brainstormed a lot of things, and we ended up building this.
Nice. So what was the journey like, right? How long from idea to exit? What was the time frame?
That was almost like maybe 6 years, 6.5 years.
Got it. And how long was it from idea to first prototype?
I think that was the biggest mistake we did. So for me, if there is one thing if I could have done differently, was the element of maybe validating the idea in terms of what we are building more with the stakeholders versus just building ourselves to the point where we feel it's really good. People are not going to throw stones at this, and this is a good time to go into the market. So we spent almost like solid 2 years building the product. And we tried to do something that, in my opinion, we could have done a little differently. We tried to tap into the human psychic and go deeper into the understanding of your subconscious understanding and motivations. Those are very hard problems to solve. But it was a very naive way of thinking. We thought we can find some patterns looking at some data. It took us forever. We had 7 patents in the process, but to answer to your question, from the time we started the ideation to building the first version that somebody could test, it took us almost a year and a half.
So with the year and a half, you guys are like just living off of savings, or?
Yeah, just living through the savings. And for me, it was that time just paying out of my pocket. And I didn't know how long I can sustain. And this is the first time I'm doing as just getting out of the work and doing this full time. Just with that adrenaline rush of, hey, this is something new, so cool. And I think you just get lost with the fact that
Did you ever think about a potential end date? Like at some point, you'd run out of savings and you maybe had to consider.
I think I was too naive to begin with, right? So just go with that flow. Oh, I have to do something. This is such a cool idea. We'll figure out. It was like a brute force approach we took. Unfortunately, I don't think this would work. I think you should always start with the end in mind. That always helps, and it need not be the end you want to be, but at least have that tentative end where you want to go towards 100%. And work towards those more objectively in place, right? So we took almost like 8 months to build the first model. So that time there was no concept of tensor models. We built our own tensor model in the process. We basically tried to do psychometric experiments where people used to do a bunch of things those are very expensive. So one experiment, as an example, 100 people walking into a room, we ask them to do a bunch of things which are like 2 to 3 hours of experiments. Look at this device, let us know what do you feel about it. Look at this color, what do you feel about this, right? And we used to pick personas from a specific field which are aligned to professional people that we are going after. So it was very hard to even get them, and very hard to basically make them go through the experiment. And at the end of the experiment, we didn't even know if it's going to work, because once we collect the data, we have to run through the models and see if we can find a pattern, right? To me, that was like pure research work. So for us, it was when we started, it was more like it took us a year and a half to build the model. And as soon as we had the model, we were fortunate enough to get into plug and play in Sunnyvale. And I still remember we didn't have a single customer, and we were thinking, what do we do now? And we built this unique way of understanding your personality without even asking questions. So that kind of perked the interest with a lot of people. They're like, how do you even do this? Are you like selling some snake oil or what? And what we were able to get through that is the attention of folks on the B2B side. We wanted to go B2C. But what we noticed is that there are a lot more B2B folks who are asking for, hey, this seems to be pretty interesting. Can we test this out? And as we got into plug and play, the very first meeting, we had a meeting with the TVS group in India. It's very popular. Nice. Their entire management team had come to Sunnyvale, and they wanted to see some startups. Nice. And they are very big on culture. So for us, we were looking for, we called ourselves the cultural DNA company, where we can understand what are your motivations and how do I align those motivational aspects to companies' motivational aspects. And that caught their attention. Nice. And the aspect that, hey, you can understand without asking questions, they're very curious, right? And that was the first break for us to know, oh, there is a need on the business side, not just on the consumer side. That gave us the lead. From there onwards, things started moving more towards the B2B space.
Got it. Okay. So how long from a year, like that MVP stage, to your first paying customer?
I think from there it took us almost like maybe four months.
Got it.
Yeah, 3 to 4 months.
How big was the first deal, if you can say?
It was not too big. It was maybe like $1,500. Yeah, it wasn't and that was that too one-time payment, and they were like cribbing and complaining. They're like, we don't have money. You're like, that's okay, give us some money. We want to validate, right? So that was the first check. Right behind that is where the TVS group came into play. That was a pretty decent size. And then we started gaining the traction with the likes of TCS, KPMG, even Byju's actually at one point were using it as a part of frontline screening. They used to have about 5,000 sales guys hiring per week. And they wanted to see how do you scale that up, right? And they wanted to, for 5,000, they used to have 100,000 applicants that they have to screen at the top of the funnel. So for them, the first line was very important. And is there a way to improve that first screening so that they had 4 set of screening after that? Can you reduce the number of...
Because every additional screening is incremental cost to the area.
So if we can make the first line of screening efficient by even 10%, they were saving easily, I would say, $50 to $75 million, right? That's a huge number. Knowing they are basically hiring so many people at that.
Nice. And so, how long from your first paying customer to like a significant amount of revenue, like let's say $1 million ARR or like whatever number you want to say?
That took us almost like 12 more months after that, 12, maybe 14 months.
That's relatively more rapid growth, right? Like
after that it was pretty rapid. I think the reason is right after that, we got in the radar of TCS. So TCS hires a lot of college grads, and their consumption is really huge, right? It's like they hire an entire village, 20,000 engineers, right? Per quarter. That's a huge number, and for that they need to have quite a bit of screening. So they had nailed down the technical screening. They were trying to see, is there a non-technical screening element that they can add without having to add more burden to the end users or the people who are applying into the role, and can it be a light touch? Can it also be non-fudged so that they can really know, is that the person giving the interview or giving the assessment, or is it basically they are just saying it because they want to get the job? So we had this element of, you can't game the system because we give you certain aspects where you don't know, what it may lead to an outcome, and that pretty much gave us the ability to really understand who you are as a person.
Nice. So you're getting to this point, right? So how do you handle? So a couple questions. How do you first handle that growth, right? Like you're out of a company, you've been
Right.
in a structured system.
Right.
How do you figure out invoicing? How do you figure out payments, taxes? How are you figuring out this rapid growth? Because, and there's two like sub questions there, which is how did you figure out pricing in the first place?
Oh,
And then and then based on that, how did you figure out the right price, the right structure? Because an enterprise may be willing to pay more for the same thing that an SMB or a smaller company isn't, right? I don't know how big TVS is in terms of scale, but I'm sure that TCS at a scale was probably being a harder negotiator
Oh yeah.
than TVS. And so how are you managing this? How are you understanding what is my P&L look like? What is my cost to serve? Like whatever you want to touch upon.
I think the first $1 million, it's hard to really nail it down to what would be the right pricing. There are two ways I see this. One is what you feel is the value that you add to the business, and you can say, I'm going to charge you $100, irrespective. You may feel I'm worth only $1, right? As a company, as a founder, you may have that conviction. You may just say that this is what I would charge, irrespective. You want to pay me less. The other part is basically see what the market is willing to pay you for the value that you bring into the table. And for that to happen, if it is a white space, it's very hard to even gauge. But if it's something which is in between the white space and also you can have some parallel to similar competition, then it's a lot easier because there is a set price, there is a set motion. And one of the key or the hardest learning for me was never try to bring in a new type of pricing which may change the way you can build the customers. Because if I know that the customer is paying per assessment, per user, per assessment, if I tell them that just pay unlimited and just do unlimited assessments and you pay a flat fee, for me to put that flat fee, it's substantial money. And for the customers, they may see that, hey, it's a flat fee. Unless they have a huge volume, they may not see the value out of it, right? So most of our customers were asking for per assessment or per user per assessment.
Got it.
For us, it was...
Is that because it was already happening that way?
Because most of the competition was selling that way. So it becomes easier for us to...
Create that baseline.
And their selling, their motion of getting the budget also becomes easier.
100%.
Because that's how they have been communicating to their stakeholders.
Also, like I think it creates a baseline, right? So like if someone's charging $1 per assessment per user and you're 80 cents, there's a clear tangible like, well, compared to this is better, whatever, right? Even if you're more, there's a comparison baseline that can be done. Versus if you say flat fee, even if it's cheaper per assessment per user, your customer is not going to go do that calculation. They'll just very high level make a decision most of the time.
True. And for me, the first, at least till you hit $1 million, just go with the flow. Look for who is doing what is the pricing that they are offering, see if you can offer a better pricing with a bigger value, and if the customer is buying into that, it becomes a starting point for you. And you can always say that, hey, this is introductory offer for you. You can always revisit as the contract expires, right? Or the other option is put certain numbers and always you can have something called as discount. To me, that's the best friend for any startups. You can put whatever numbers you want, but depending on what the needs are from the customers, and if the customer is going to be valuable for your growth as well as your story, just give them whatever discount you can so that you don't bleed in the process, but at the same time take the value of growing the business.
Nice. So at this point, you haven't raised any money, right? Plug and Play, I don't think does money equity. They do just like some form of equity corporate partnerships.
That is correct.
Right?
Till that time, it was completely bootstrapped. We were just going through that motion and bootstrapped to the point where it was becoming harder for us to just continue. And as we were looking at different options is when we had also, as we got into TBS, we were seeing TCS coming into line. We also were fortunate enough to get the traction with universities, which is very interesting. So because we had created an assessment where you don't have to ask questions, one of the professor felt that this can be a great way for students to get connected in the process. So he basically used our service. We created an app for him, which allowed students to sign in without asking questions. I can tell you, hey, Abhinav is sitting here. this is his personality, these are the potential interests that he may have. So it's almost like professional dating. How do you
Nice.
connect students with each other? That's what we built. And that instantly got picked
Traction.
up by San Jose State University.
Nice.
And as we got that traction, we were showcasing this in one of the events, which is Collision. This generally happens.
Yeah.
It's very similar to
Yeah.
Web Summit, Collision. We got
Toronto
picked-
based, right?
yeah,
Yeah,
Toronto
yeah,
based.
yeah,
Yeah,
yeah.
that is correct. They actually are based out of it's Web Summit is Ireland. So their sister, they have multiple.
Oh, okay. I didn't know that. Got it.
Yeah.
Got it. Okay.
So now it's Collision is now branded as Web Summit Canada or Web Summit
Oh,
Toronto.
okay. I didn't know this. Okay.
Yeah,
cool.
now
cool,
it's
cool.
Web
Yeah.
Summit Vancouver. I think it's happening end of this month.
Nice. Are you
End
going?
of May. So what happened in that process is, as we got San Jose State University, we were pitching the concept of connecting people, like-minded people, understanding their cultural values, and we in one of the competition within Collision, we got second spot. And as we were pitching our concept, one of the investors actually was in the mix. It's Mitsubishi Ventures, right? And there were like bunch of people, 9 people. They were listening through this, and right after the session, somebody just came in. They said, "Hey, what's your phone number? We want to talk to you about funding." They're like, maybe we have talked to 100 more investors. Everyone says all the right things on your face, but nobody calls you. It's all crickets after that. So I said, okay. I gave him the number. And it was very interesting. It was Friday morning when the pitch event ended, and I was flying back to San Jose from New Orleans. Saturday morning, I get a call around 7 o'clock saying that, "Hey, are you Ganesh?" I said, "Yeah." And it was a Japanese person and very heavy voice. And he said, "Hey, are you free tomorrow to meet?" I said, "Tomorrow is Sunday. Where do you want to meet?" He basically introduced himself. He said, "Hey, we met Mitsubishi Ventures." I said, yeah, I remember. He said, "Yeah, I'll come to the office tomorrow if you are there." We had an office in Fremont. I said, "Yeah, I'll be in the office then. Please come over." 7 o'clock, and that too, they wanted to come at 7 o'clock in the morning because they had some people who had to catch a flight around noon from San Francisco. So I said, "Yeah, that's okay." So 6:30, I come to the office. 6:45, there were like 12 people in front of the office. I was like, 12 people, and I got some snacks. Like I got some
For 1 or 2 people.
Yeah, I got it for 3 people. I didn't know there were like 12 people. I
Yeah,
got some coffee and donuts, maybe for 3, maybe 4 people, right? And coffee for maybe 3 people.
When is this? What year is this?
So around 15,
Nice.
2015 is when end of 15, yeah. So these guys show up in front of the place, and I was like, wow, so many people. So I get them into the conference room. The conference room was having only 6 chairs. I had to pick up all the chairs from different places, and I was just standing there. Long story short, they really loved the concept of what we had built as an application for the university, and they wanted to see if they can replicate that across different universities in Japan and also different parts of US too in the process. I told them we can look into it. We don't have a Japanese app. Are you okay at least starting with English? They said that's okay. They did a small prototype with us, paid for it, maybe 10K for it. And they tried it internally, and that really clicked for them. And then they went and talked to the San Jose State professor. He gave some good feedback, and that really helped us to gain our first funding, institutional funding. And what is interesting is these guys generally go for Series D and above. Their minimum check size is $40 million. And when they came in, they asked, well, how much money do you need? And that time I didn't even know what to ask. I said $1 million, right? He said, "Oh, $1 million is too small, but let us see what we can do." And I thought they're just taking some data. They may not even revert back. They went through some due diligence. They asked a bunch of questions. They talked to the professor, and after maybe 3 weeks, they just went silent. We had done the work. They did the prototype. After that, they talked to the professor, and after that 3 weeks, no communication. I said probably this is not going to come through. It was interesting that they had to take approval from both internal and external board members because it's a publicly traded company in Japan. So they went through that process, and they came back and said, "Hey, we want to invest in the company. Are you okay to take the check?" So I said, "Yeah, why not?" And we ended up building a white label business unit, which ended up being their first HR practice within Mitsubishi Ventures.
Got it.
Yeah.
How can you say how big the check was? What valuation? How did you figure those things out?
Valuation, it was for me, it was a safe round. So
Got it.
I told them that I don't have a clue what the valuation it would be. It had a cap it had a discount.
Nice.
That's what I gave them. Right. We actually did not.
At that point, you're doing $1 million ARR. Where are you at that point when you had this conversation?
We had crossed $1 million at that time, and we were going into primarily seeing how do we scale up the organization.
Got it.
And as that was happening, we were also trying to. Our focus was more towards going after the customers, because to me it's a lot easier to show the traction and get the money, versus talking to the investors. If they don't, there are two ways I see investors give you money. Either they trust you and they know that you're going to
deliver.
Yeah, you're going to deliver, you're going to make more money, you're the subject matter expert in this, or they see huge traction. In between, nothing works, right? So I didn't know any investors. I tried to pitch, nothing worked. So I said, okay, let's focus on just getting the revenue in place. So for us, we basically got them, and after that, it was just getting some of the bigger deals in the process, and we got the likes of Greg Kidd, who was the initial investor in Instagram, I think Robinhood, Coinbase, even Twitter. He was the initial investor. So he came in the process, and that really gave us the momentum to get some good angel, or I would say good investors, who really helped us to open the doors with some of the customers.
Nice. And this is roughly 2015 or so, you're saying, right?
This is, so the first one came around 2016 is when we got the funding. From there, it took us maybe 2 more years to get a little more funding in the process. I was then actively trying to grow the business. I stopped doing the funding, but if there is a good investor who comes in organically, if it makes sense, why not, right? And if there is no dilution in the company, why not? So
at this point, you're doing all safes.
Yeah.
Like you haven't done a price round at this point.
No, we actually did not do a price round till we got exited.
Okay.
Yeah.
Oh, nice. Okay.
Yeah, we did not.
Interesting.
Yeah, we did not. Yes and no. I think what was interesting is, as we were gliding nicely, one of the things that we saw was that we had built an assessment where you don't ask any questions. So we are trying to sell it to TCS, we are trying to sell it to KPMG. That the motion was slow, because these companies have their own sweet time. They take their own sweet time. We actually also worked with Indeed.
Nice.
Not Indeed, but we worked with Recruit in Japan. And
makes sense.
They take their own sweet time, right? They did analysis for more than maybe 9 months. A lot of analysis, right? And I still remember we went through almost like 80-page report, going through each and every item, what's working, what's not. Very detailed analysis. It was a good report. It was positive for us, but it took forever to close that deal, right? But to answer to your question, I think the question was, you're asking.
No, so like you go from raising, you're doing a safe round. What was the idea behind growing? You had $1 million ARR. You said you're focused on customers. You're focused on.
Yeah. So basically, it was very interesting. So we are focused on this B2B space. We felt, this is the place where we can make money. And as we were doing that, as we were pitching in Collision in the next year event, we saw a partner who was in the HR tech space. Who they did HRIS systems. And they found the aspect of what we do without asking questions very unique, and they felt if we can do this for low pay, high volume roles, this can really open up a lot of doors. Because generally, if you think about people who are working in Starbucks, McDonald's, they don't have a resume. How do you know this person would fit well? You ask, hey, where did you work before? Can you give me some reference? That is the only way to hire them. And their attritions are generally 150%. Right, not even 100%, 150 per year, which is like every less than a year they churn a lot more people in the process. So it's a very, very hard place to be in as a restaurant QSR business. It was a very hard place to be in. So this company partner was focusing on QSR related HRIS system, and in one of the events they saw what we are doing, and they were like, can we basically attach this into our service as a default assessment? We will pay you a base, and on top of it, any customers that come in, we will pay you per customer per month. I said, yeah, that makes sense. We went into the deal, and within a span of maybe six months, maybe 8 months, they ended up, that segment, QSR space, ended up being almost like 75-80% of our revenue. I was like, wow, this is like, there is a big opportunity here. We should now focus here. So we started going really hammer and tong. Hey, let's go and sell it to every place where they don't have a means to assess. And we actually also got into the Universal Studio in Florida. We actually physically, they had these tablets. We put our assessment, and the assessment was very simple. We had a hodgepodge of colors, and you had to choose any 10 within 60 seconds. Just pick the ones that you like the most. And through that, we were able to give an assessment in terms of not only who you are, what motivates you, but what kind of roles may suit your personality.
Nice.
So it was based out of Holland's Occupational Insights, Gardner's theory. It was based out of Big Five. So we had merged in multiple personality into one assessment, right? And what came out of those processes, we were going hammer and tong with QSR. We got into these hospitality business, where we saw Universal Studio trying it out. They actually had a fair where they have maybe 500 people walking in the door in a day. Many of them don't speak English, so it's very hard for them to even communicate. They need to have Spanish translators in there. So everyone walks in, they're asking what have you done traditionally. There are multiple roles that they have open, so they direct people to go and basically give an interview in certain areas. So out of the 500, they hire maybe about 100, right? That walk in that day. So, and they do that every week in the process. So they wanted to see if there is a better way to connect people and not lose people who are going in one place. They are basically said, hey, you don't fit here. They don't know where else they can go, right? So using this assessment, the users come in, basically select the bunch of colors, palettes, and based on that we will say that, hey, go to this arena. If they don't get selected, automatically it tells them, hey, maybe you should go into the next one, because there is a chance you may fit well into that area. It can be a bursar, it can be somebody who is in the back office, whatever it may be, right, in the process. So we literally signed the deal with them, and this is just before COVID, a month before COVID. We signed the deal. We were preparing for the ramp up. We hired a bunch of CSMs just to support this deal and make sure that it goes well. I was flying back and forth between San Jose and Florida just to make sure that things go well. They had physically installed this as a part of default assessment for all their tablets for the people who are walking in to sign up, right? COVID came out of nowhere. And we had to go through the second round of, they had this job fair, which was supposed to happen. It was, I still remember, it was end of Feb was the first one. And the second one was end of March. And I think mid-March is when US went into a lockdown, right after COVID.
March 15th, 18th.
Yeah, 15th around. Yeah. And right after a week is when they had to have this job fair. So I got an email from the head of that hospitality / people recruitment talent acquisition head. And she said, hey, don't worry, maybe we may open up in a month. Let's delay it by a month. 1 month passed by, 2 months passed by, and she pinged message saying that, hey, I don't know when we are going to open. Maybe we have to cancel the contract. That was just the one. Not only that, but we had 3 other partners on the QSR space. Everyone closed the contracts.
Yeah.
Within a span of maybe 5 months, we lost almost like 85% of our revenue.
Nice.
And I was like, wow, we need to do something here. And either we had to cut down people or basically go and hire more people.
Taking a step back, right? So 2016 roughly you raise. This is still a safe.
Yes.
You started, when was the year you started the venture?
2014, early part of 2015.
2014-15, got it. And 2016 you're roughly million ARR.
Yeah.
Are you comfortable saying just the trajectory of like what every year was?
Yeah, so
even ballpark.
We were growing at about 2. First it was getting to $1 million. It was close to maybe 50, 60x as you're growing. But once you hit that milestone, it was generally 2.5 to 3x
every year.
Roughly every year till we hit the COVID. So
got it.
COVID happened, I think 2019. Is that right? Yeah.
So March, so December 2019 is when it was first like.
Correct.
November,
correct.
December, and then it ended up coming to the US Jan types. Yeah.
Correct. So for us it was like, so the chronological event was we were hitting that milestone of $1 million around 2017. We then from there onwards hit 3x, going into roughly 3x for the next year is when we started hitting this COVID.
Got it.
And all of a sudden we literally had shifted from B2B. We said we had very limited resource. So either we raise a lot of capital and then expand both B2B and as well as QSR space, or we said, okay, let's focus on QSR and let's go deep into this and seeing where it takes us. And as we just put all the resources in here,
And then COVID hit.
oh boy, that was like really hard. It took us almost like, so immediately we had to make a decision.
How big is the team at this point?
At that point, it was maybe 32, 34 people.
Still relatively small,
Yeah, it's
right?
small.
Not
It's
like
a small
big
team.
Yeah,
It's a
yeah.
small team. We try to be very frugal.
Nice.
And one thing that we followed is unless we absolutely have to hire, we don't hire, right? Because it's easy to hire, but not that easy to let go.
And also, someone who doesn't have a very defined role affects productivity of a lot of other people as well. Because someone's managing, someone's doing this, right? So, I was talking to a founder today morning who raised 21-22, did a follow-on round in early 24. But they were saying that, hey, there was all this pressure to grow. So they went from like 5-6 people to 60.
Right.
And now you're like, okay, now what do we do at 60, right? Like we don't have, like we did a lot of things that we cut down on, laid some people off, and like, trimmed it so that you're now more effective. But yes, to your point, just having so many more people diverts your attention. It's like, okay, now I need to give this guy work.
Correct.
Not self-sufficient, not high action, yeah.
Correct. And not only that, I've seen at Cisco, too many people just becomes too hard to manage. Too many issues then come into play, and then becomes you're focusing more on people issues versus product issues, right? For us, it was more in terms of just making sure that we are prudent with the money. We didn't hire much. So at that time, we were about 34, 33, 34, maybe 32 to 34, right? And right around that corner, and those were full time, we had about maybe 10 to 12 consultants / part-time, more on the sales side of the house. As that came into play, within a span of maybe 4 months, we had 3 big partners going belly up in the QSR space. And that was a big blow for us. And at that time, we had to either let go people or basically find investors who will trust in terms of what we are doing. It was really hard that time.
But why did you need investors at that point? So, if I understand correctly, after COVID, you lost 80% of revenue, but the revenue you were making was not enough to sustain the burn at that point. Right? Is that correct?
That is correct. We had some really top-notch data scientists. So
Got it. So
it's not cheap.
Yeah, 100%. Yeah, and then also, I'm assuming that the funding you guys raised was not enough to sustain.
Yeah, we actually didn't want to raise too much money because we felt we can grow through the business. Why should we go out
Why
and
dilute
raise?
as well, right?
Why dilute, right?
Yeah,
That's the and probably to me, I don't know if I still have the answer. But if you get money, you should just take it. Unless it's hurting your business, you should just take it, because money solves a lot of problems.
100%. Yeah.
Right. You can't just have yourself or somebody else take a lot more work and try to solve the same problem.
Makes sense. So you go belly up. The companies go belly up. You lose 80% of your revenue.
Correct. So
what's the journey after that? Yeah.
So after that, primarily we had about so the key part is in these aspects of them going belly up. They had, so the way it was structured is every quarter is when they pay at the end of the quarter. They didn't pay upfront in terms of the assessment, and to me again that's a naive way of doing the business, because if I had to do it again, I would rather put certain money that they have to commit to, not just commit to but also pay upfront. So some of them actually were delinquent for almost like 2 quarters, and they said, hey, we'll pay you, don't worry. And these were like good
Big
size
companies,
company, $100 million and more in revenue. I said, okay, maybe there is something going on, it's okay. We gave them enough leeway. And when this happened, we already had a backlog of almost like half of the revenue was just in bookings, and they are not paid us. And
are you comfortable saying just a ballpark number?
Yeah, it was
just to give people an idea of like.
Yeah, it was around $3 to $4 million, right? Revenue. That was just in the books, not coming through. And also we had to run the show and make sure that we had committed to certain aspects. We had gone and signed up to almost like 30 conferences for that year. We had already paid. Now what do we do? And you have to go and basically try to sell. So we can't just backtrack because we won't get the money back, or it's too much of hassle to get the money back. We had put money towards the consulting on the marketing side, branding side. So there was quite a bit of investment knowing we are going to get the money. And it was like really stressful, where we are trying to figure out how do we manage this and not lose the team, because we didn't know, are we going to pivot, or are we going to just say that, hey, this is not going to work, let's cut it down, ride this wave, see what's going to happen, just keep it afloat, and then see if the company is surviving after a year or two. For us, thankfully, that's when TCS got picked up quite a bit. And when COVID came in, all the work from home started picking up quite a bit, right? So TCS wanted to
hiring
understand.
went back up.
Hiring really went crazy at that time.
Everyone's offshoring at this point.
Yeah. So at that time, I think a lot of people focused on technical assessments. We came in from the perspective of, because you're working from home, how do you understand the non-technical aspect of who you are, what motivates you, and how do I align those motivations to the right opportunities. So that story resonated a lot. They tested it out internally, they liked it, and they started basically putting this as an assessment for every freshers who are coming into the TCS. They have this, forget the name of the...
Do they still use it?
I believe so, yeah.
Okay.
Yeah.
Nice.
Yeah. So right after that is when Byju's came in. And right after, those are like volumes, right? It's not just one or two. It's
and
like
when you're priced per assessment per user,
correct.
As they're blowing up, like
Correct.
you're also getting a lot of money.
Correct.
Right? Yeah.
Correct.
Nice.
Right. And TCS really opened the doors for us in many other places. Like we almost made it to the Indian Army and Indian Air Force, and they had gone through almost like a year-long assessment to figure out, are we giving them validated outcomes compared to, they have psychometricians who do this for a living. There are like 60 psychometricians in Air Force who conduct experiments, who give you not only the assessment,
but do what you were doing with tech manually, right?
correct. They do it manually. At the same time, they're trying to gauge, is there enough signal here that should be that we should know, which may be detrimental in terms of hiring process, because those are like life and death situations. So it was very interesting to see TCS getting us those opportunities. Without them, it's impossible to crack that nut.
Also in India, TCS is a brand name, right? So like,
it's a trust factor.
if you can say TCS, you're like, okay, they've done some level of due. It's like, you know, when you go to an investor, you're like,
Correct.
oh, A16Z backed me.
Correct.
Like, oh, great, he did, maybe
Correct.
I don't need to like look too much, right? Like,
Correct.
take my money sort of thing.
That's true.
So I feel like that brand value also makes a big difference in just sort of
It
like
does.
your perspective on how to do things, right? So this was roughly 21, 22?
This is roughly, so this is 2019 is when COVID happened. Within 7 months, it was really tough time for us. We had to decide what we need to do next. And at that time, we primarily made a decision. It was probably a decision, I don't know. It was the right one, but we said we are not going to let go anybody. We will give it our try to pivot ourselves towards more toward the B2B. That's where we started, right? We said, okay, let's go there again. And we didn't know this work from home culture is going to pick up. And thankfully it picked up. These guys showed up at the right time, and that really helped us.
Nice. And then when was the exit for you guys?
The exit happened 2022. So 2022, end of 2022 is when exit happened. And this is we didn't even go into the conversation as an exit conversation. We were seeing again the traction coming through. We were preparing ourselves for the next round of funding. And as we
are you comfortable saying what ARR or what annual you guys are doing at this point?
We were again getting back to the same place where we were pre-COVID.
Got it.
And primarily because of higher ACV, higher ARR coming
Nice.
through the partners. It
Makes
was
sense.
Otherwise, previously it was like a lot more cheaper in terms of assessing, but you have to have enough volume in place. But here, still, it's we're looking at, even though it's TCS, they were using it outside India. They were using it in US. They were using it in Europe. They were using it in Canada. Similarly, we got into KPMG right after that. So those ACVs were pretty higher, right, in value.
So like, what is the exit? How is it?
Yeah. So basically we were looking at partners, and one of the things that we had seen was we had partnered with this company called as Learn at Forbes, part of Forbes magazine. So they wanted to understand what motivates you to pick the right content, incentivize you to go through the entire training courses, what motivates you to read and take actions. That's what they were looking for. So Forbes spun this unit called as Learn at Forbes, and they saw how we are doing the assessment, understanding people's personality, understanding their learning style, Gardner's learning style, and from there we could see, okay, based on your roles, these are the not only the skills that you need to look for, but these are the style of content that you should be looking at. Are you going to be more visual? Are you going to be more verbose?
Nice.
Depending on that, how do you show the right content? Are you going to be more of musical, which is more video oriented, right? So we started building a platform for Learn at Forbes, and it was meant to go into the B2C space. As we were doing that, we are also looking at other partners in the L&D space who may use a similar technique to basically build a new platform into their product line. We reached out to this company, and I was just talking to the founders, letting them know what we are doing, and it is interesting that they caught on to that assessment, 1 minute assessment, and they felt this is a unique way to assess people, and if it can help in terms of bridging the gap of the right content, also the style of content that would help you to attract and take actions. That is like the holy grail within the learning development space, right? So that conversation ended up, instead of partnership, as we are talking about it, they recently had got funding from a PE firm. The PE firm liked what we are doing with the company that acquired us, and primarily instead of partnership, they said, hey, are you guys open to acquisition? I said, we're always open to acquisition. The numbers should make sense. The numbers made sense. Investors made some good chunk of money in the process. Yeah.
So how does that work when you never did a priced round?
Yeah.
How does the safe convert at that point? Is then your acquisition just your first priced round, or?
The acquisition price ends up then, so there is a cap. That's the reason cap is very important. So if the acquisition happens above the cap, basically at that price, they basically would get a lot more shares, and which means that they end up taking a bigger chunk of the company in the process. So for us, the acquisition was bigger than the cap that was set earlier, and which means that some of the investors made quite a bit of money in the process. Yeah.
Pretty cool. And then I'm guessing because there was no price rounds, you guys weren't very diluted at that point.
No, not at all.
From a founder perspective.
Not at all, thankfully.
Then how did you handle taxes at that point? Because I was talking to a founder the other day who mentioned that on your first exit, you don't really know how to deal with, where do I put SBC, QSBS, all these things, and then how do you take the shares? Do you take shares? Do you take cash? Where do you take it? How do you take it? Like all these things. How were you aware of those things, or you just sort of dealt with it? And
no, I wasn't aware of it. First thing that I did was when things started getting serious, we had a council that was representing us as a part of basically making sure that everything made sense from the perspective of the acquisition. And at the same time, I got somebody who was accountant, CPA by nature, but they were also doing business consulting. So this person really helped me to understand what is the best way to basically structure it. At the same time, make sure that those earnings are put in a way where it basically helps the founders to pay the tax, but it's not crazy amount of tax in the process. And also there is this element of, if you are C Corp for 5 years or more, your tax structure changes significantly. So if you can sustain for 5 years, if you are a C Corp, automatically you get those benefits in place.
Interesting. Okay, cool. Because I feel like these are kinds of the things about being a founder that you're not aware of. Like I know a couple of founders who've raised some cash, and they're just like, yeah, it's sitting in a normal checking account. I'm like, you have all these high yield bonds, treasury bonds that you could, that are very low risk. Like if high yield savings is no risk, right? Just take the 4.5%, because if you don't know what you want to do with it, and it's a very small thing, but their answer is like, oh, I don't have the time to think about this. I'm like, I don't think it takes a lot of time to like click 7 buttons and maybe send an email to your accountant, right?
Yeah, probably.
But I feel like these small things are just really help you down the line, right? Because understanding structure, understanding tax advantages, understanding solo 401k options and all these things, if you start setting yourself up, because you can't guarantee that you're going to get a successful exit.
Yeah.
And if you don't know how to sign term sheets, it's possible that in your exit you don't make a lot of money because of just how liquidity preferences work.
Oh yeah, yeah. That's always the case.
One thing I was going to ask you is, how do you think about paying yourself as a co-founder, CEO, sort of that structure in the company? Because I've talked to a lot of founders who are like, yeah, I'm just like paying myself like 2K a month right now just to survive. But I also think like if you're a funded startup and you have some traction, you have a vision, you're not like defrauding investors, but like you're doing your job, right? I think there's a certain structure where it makes sense to start paying yourself properly, understanding what that looks like, understanding your saving bandwidth. Because let's say everything goes away tomorrow, like, you lost all this revenue. You can't just be like, hey, I don't have a job, I don't have any savings, my company shut down, I don't have any money to return. Like, I don't think it's fair for you to put yourself in that position. So I think just whatever thoughts you have around that and like structuring that pay, you guys are making more money going up, do you start increasing your pay? Like, how do you think about that as a founder?
I think one of the key learnings for me is you should always pay yourself. If you have money, pay yourself, and do all the right things. But end of the day, you can't win a battle without feeding the army, right? So for me, it's so the first one pretty much. I didn't even pay myself for almost like 5 years. It puts a lot of strain at home. For the founder, they're going through the emotional rush, adrenaline rush. You're like, oh, we'll do this, but the family doesn't see it that way. That's, to me, that's a very hard learning. So for me, if you're bootstrapped, get to some revenue, right, and see if there is a chance for you to at least split the revenue. Maybe you're not paying yourself, but get to that goal of get at least $100,000 as a cumulative revenue for the company. Take 10% for the founders in the process. As you go $1 million, see if you can maybe reduce that to 8% if needed. But once you have that, and if you get some extra funding, absolutely you should at least pay based on the fair value, making sure that you're not cutting yourself in the process financially. Because that plays already, to me, the founders take a big risk.
There's already a lot of strain. This is just a lot more strain. Yeah.
You try to de-risk at home as much as possible.
I would say maybe there's one difference if you're like a 21-year-old kid out of college who has nothing to lose. Maybe that's a little different than like someone who's in their 30s, 40s, who has a family, you have kids. Like, I understand that you want to like make sure your runway is the best, but like, if $90,000 is the difference in your runway, maybe you're in a worse spot than you think you are, right? Like, if that's gonna make or break your company, I feel like you have bigger problems to worry about.
I think well said. But nowadays, I wouldn't be surprised if you can build a formidable product even with $100,000 investment. To me, I think things have changed so much. And it's amazing how much you can do with how little, right? Previously, it was impossible. You need to have.
It's funny. Like, a lot of founders come to me for the agency. Like, I want to build all this enterprise SaaS, this, that, and I'm like, have you tried validating your idea with like a Google form?
Right.
Like, you can do a Google form with a Calendly and payment on Calendly.
Right.
And that is, I mean, if you're solving a real problem, that is a problem enough.
Right.
That should be enough for someone to convert. Now, maybe the bar has gone up a little bit where with all these AI tools, Replicate, Lovable, Bolt, maybe your MVP looks better, but at the core of it, you're still solving the same problem. So if they're willing to pay on a Google form, they're willing to pay on a fancy looking page, I don't think it makes a big difference. Maybe I'm wrong in this, but I feel like the one counter argument I have to, like, it's become so easy, it's also changed the bar. Now it's like, oh, I don't need a fancy, like, I'll go to Replicate an agent, and like, now you get stuck in this hole. Now you're fixing the bugs with Replicate because it doesn't work, right? And so, like, is that worth it? I don't know. I think there's a lot of opinions there, but
true. But at the same time, what I've seen is as an example, well said, right? If you use too many tools to stitch and build a solution, it becomes harder, because all of these are bolted on an untested platform, which is large language models. Definitely, it has a lot of credibility because a lot of people are using it on a day-to-day basis. It has a lot of intelligence, but it still is very untested, right? But if you can stick to that base and build on top of it, it becomes a lot more easier. And what I've seen is some of these harder problems of unstructured data, creating some structure, becomes a lot easier in the
100%.
process.
100%.
Right.
Yeah. So quickly touch upon, you've had a successful exit. Would you say it's life-changing money, or I don't want to force you
It's
to
a
say?
decent one. I think the investors made more money in the
Okay.
process because the way we structured in a way, that's the cap, right? At the end of the day, if you're higher than the cap, they basically get a lot more chunk of the company. I'm okay with it because end of the day, they gave us the check when
You need
nobody
it.
was
Yeah.
believing in
Makes
what
sense.
we can
Yeah.
do, right? So for me,
Yeah.
that's
So,
it.
the reason I ask is for that frame of reference of like, you don't necessarily need to work or build another company for a while, right? Like from that perspective, you're sort of financially set.
I maybe yes. It depends on the needs.
At that point, like, it's
Yeah,
never
yeah.
enough, right? Like
Yeah, I
even a
think
billion is never enough. But
yeah, for me, I think it's it's good enough. I don't. It's not. If I don't work, it's not going to financially
yeah.
pinch.
And the reason I want to like establish that base is you went into stealth and started another company when you
Correct.
saw this change happening, right?
Correct.
So I want to touch upon that fact of like, 9 out of 10 founders don't have a successful exit on their first one. So, you had a successful, like, why go back into it? Why go back into entrepreneurship? How hard it's been. You've seen the ups and downs. You've seen the loss of 80% revenue and come back from that. So you sort of know what you're getting into, right? So what is that thing that's pushing you into, "Arey, let's do this again?" And that's
I think again the aspect of the first one was also purely based on the pain point, right? And I didn't know if I want to start a company. The second one was we saw this fundamental shift happening in the GPT. So we were using GPT 1, 2. My co-founder is one of the top-notch data scientists in the world. He used to be a professor in top schools for more than a decade. So he has contributed to some of these large language models. And we knew the shift that was happening. And the moment we saw the shift with the 3.5, we felt that this is going to fundamentally change the way not only we work but also we live as humans. And as that shift happened, we felt, hey, we should look at, is there some burning pain point that we can pick and start resolving those more meaningfully. Not to say that what we were doing is not meaningful, but this shift, and is there a bigger problem that can be solved? That kind of motivated. And to me, I think just personally, I feel like solving a pain point, it's more exciting to me. Hey, there is a common pattern that we can identify and solve that pattern.
Did you raise money with the idea? Did you go prototype, fund it yourself, and then raise? I don't know. I think you've raised. I'm not sure.
No, we
haven't raised. Yeah,
no,
yeah.
we haven't yet.
So you're just self-funding and then start
Self-funding.
figuring it out. Yeah.
Self-funding. So far, it's in a very crowded space. One of the things that we are doing here is trying to figure out, is this the place where we want to spend the next 5 years, 10 years, whatever it may be. And from my previous startup, the key learning is talk to as many stakeholders who are going to buy and ask two questions. What is your pain point? What are you doing to mitigate the pain points? And what comes across patterns from those conversations, see if you can mitigate the problem. It's in a very crowded space, sales enablement. As the moment I say sales, all the investors just run away. But what we truly feel is
Change
that
it to revenue.
yeah, because it's and not just that. I think there are so many tools and so many
100%.
players.
Yeah.
I was just talking to one of the investors.
Cost of entry has also gone down a lot.
Oh, quite a bit, right? You can easily. Everyone is doing the same thing. Take the transcript, create email draft, send recaps. It becomes so easy. You just put a wrapper on top of large language model, but nobody is taking an end-to-end solution, right? And that's what we are trying to see here. Is McKinsey actually published an article recently where they said there are B2B deal cycles where they see Gen AI playing an impact, right from awareness to closing the deal to growth and basically sustaining your customers. What they saw was there were so many tools in each of these elements, and they were talking about if there is one tool that can take all, this can be a game changer in the process. It's a huge market. It's like close to 60, if I'm not mistaken, 60 or 70 billion dollars market, right? And if we can really tap into that aspect of consolidating, but more importantly, converting not only the insights, giving the insight, but also converting that into actions. That's where the money is.
Nice. Pretty cool. A couple rapid fire questions.
Sure.
What's your tech stack right now? How are you building the new company?
So when we started, we actually knew the hallucination is a feature within large language model. Everyone knows that now. And we were going after building more of sales analysts as agents. From the get-go, we knew it was in sales. We knew it was doing work related to crunching out numbers. And we knew if you throw Excel sheets and ask large language model to predict, it will always hallucinate. Not always, I would say 6 or maybe 7 out of 10 times it will hallucinate, because the foundational models or the foundational base is predicting the next best letter, not the best number.
100%.
It always looks for patterns, right? So for us, it was important to build statistical tools that can couple with large language model. So we did a lot of statistical tools, knowing what the sales guys look out for, and then the orchestration is done using large language model. So before Crew AI came in, we built our own Crew AI kind of environment where basically there are multiple tools. Each of these basically talk to each other. So primarily it's more of statistical tools coupled with some of these large language models. We are using Julia as an example, not Python, which is the next version of basically language in the large language model space. MIT is using it quite a bit. For us, we are building our own framework, and we are Amazon Bedrock. We are actually agnostic. It can be Azure, it can be
Nice.
Amazon, it can be even GCP. Actually, we are talking to IBM as we speak. They are also trying to see if we can be part of their accelerator program in terms of go-to-market strategy.
Pretty cool.
Yeah.
And then I want to say you just signed one of your first customers.
Yes.
And you onboarded them. So congrats on that.
Thank you.
I don't know when this will come out, but I mean, it'll be after anyways.
Yeah.
What can folks reach out to you about? What can they help you with? Where should folks reach out? What can we plug for you? What can we link for you?
The plug for the
Yeah,
venture?
what to plug? What's going on? Where can folks
Okay.
reach out?
Okay.
How can you support? And what do you need help with? Like,
Sure.
and
So-
if anyone listening to this, how should they get in touch?
So what we are building is primarily sales analyst as an agent. So if there is a company that is having at least $5 million in revenue and they want to grow quickly in the process, we are the right tool for them, because we can help every AEs, account executives, and CSMs. We don't focus on BDR or SDR yet, but we focus on the moment a account executive gets a lead, from there to closing the deal, as well as making sure that it doesn't churn and increase the wallet share. And what we do is focusing on their operational activities and completely automating that, soups to nuts, document creation, meeting automation, resident knowledge, basically giving them coaching. And also we have created a unique way of podcast style training, very similar to Notebook LM. We have built our own agents doing that in the process. So if any company wants to be a part of the early adoption program, we are signing up right now for free of cost, no charge. And the way we are also disrupting the market is we are basically going to charge the companies based on the revenue that we enable. So if we don't enable the revenue for you, don't pay us a dime. And unlimited users in the process, right?
Pretty cool.
Yeah.
And then LinkedIn's the best way. Email, what should we
Yeah,
plug?
the best way is reach out through LinkedIn. I
Nice.
can put my email address
Nice.
in the maybe the
Yeah, and
video.
we'll add the notes and everything. And then, but no, I think we'll definitely need to do like an episode 2 at some point and just dive deeper into some of those founder mentality questions. But I thoroughly enjoyed the conversation.
Likewise.
Thank you.
Thank
Yeah.
you.